So, hello, and a massive hello to everybody. Hope we're all having a great weekend wherever you are, whatever you're doing. The 50 pips rocking and rolling, 5th of the 5th of 2019. So, here we go. No trade calls, recommendations, response for their own stuff here for educational purpose only. What's happening? So, Trump pretty much kind of jinx or change plans for any kind of orderly trading into the open this week, right? So he's been on Twitter saying that essentially he's going to up tariffs by next Friday, that the Chinese are going too slow and they're trying to renegotiate, and that's not going to fly. So again, really the focus is, let's not kid ourselves, it's all and only on Trump and China. So I think as much as everybody's focusing on his tweet, I think really this is just the opener, right? What matters is, number one, are China going to cancel their trip to the US? Are China going to retaliate? And more importantly, is how is he going to react to whatever their retaliation is? So again, going into this week, it's all going to be about China and the tariffs. We do have a lot of data. I mean, we've got China data. We've got Polo speaking. We're going to have Powell speaking this week. We've got two central bank rate decisions. We got the RBA and the RBNZ, right? And there's a lot more data out of UK and US too. But again, as I said at the beginning, let's not kid ourselves. It's all about the tariffs, right? So clearly, the first thing that we can see or will see here into the open is that the dollar will likely catch a bid across the board. So here the focus as far as USD CNH is going to be is this going to hold above, and how hard is this going to press? Because I think everybody's assumption now, following what happened, is that this is the path of least resistance, is that it's going to try and take another stab at 7, and are they going to fend it or not? This is really could turn into mayhem, so this is really the level you want to watch out on USD CNH. And again, in terms of the dollar move, a lot of things are playing out the way we expected them to play out in terms of the trades we have on, right? So our preferred trade has been the short on USD JPY, right? Continued aggressively shorting into the 112 for a move back into the 111 and the 110. So you see here, we've just had a gap down. So this was already looking good into the close. And again, does somebody always know something? Well, the action in gold and yen into the close the whole day on Friday was a little bit suspicious, but again, we're not going to complain because that's exactly what we were looking for. So our trade is still in play. Clearly, in this kind of condition, you do not want to have, or at least I'm clearly not going to have orders in the system to fill my final positions at the 110. At this point, I'm going to leave those open, right? Keep in mind that we're going into Monday trade where Asia is not going to, well, Japan's still on holiday, and it's also bank holiday in the UK. So, the two major Forex centers, the two major liquidity centers, both in the overnight session and the beginning of the EU day, are on holiday. So we could see some funky action. And here, just as a reminder, this has not changed for us. This has not changed for us since our view last year. At the 114, we're looking to yen to go back into the 100 level, right? And this is a trade we've been trading on and off for a while. We took the big trade off, the big swings off. We got filled at the beginning of the year with that little gift from the gods. And here we've been basically spending the whole year since we came back into this 112 trying to position and get back into that final trade, right? So here the trade is trying to get traction. Normally we would expect this to play out in kind of a healthy fashion, right? Not all the way down, but here it has the potential to accelerate. So clearly no interest to get long here, no interest to flan up in the 110s, looking for this to possibly accelerate to the downside in an ugly fashion. And in terms of the other trades, here we have on, which is less interesting, and you'll see this probably won't react the same way. the Swissy was in play for the move back into the breakout zone. And now here we're at a really key pivotal level for either a move higher or a retest of that ascending line on the weekly. Now remember, this is not the ideal play if you're looking for risk off, right? You're also going to see the euro is suffering here, so this is going to have a tendency to stay bid. The par excellence, the risk off trade is USD JPY. That's what we're focusing on, right? Speaking of euro, what's going on the euro? Well, again, here it's getting hit. No surprise. I would watch this very early in the week, right? The way this is trading here, this should have every excuse if the dollar is going to get bid up strong to trade sub the 111. If this does not trade sub the 111, we will be getting more and more aggressive and higher conviction for this to move all the way back up. Okay, so we're watching this very closely into the open. I think for anybody trading, any move back above the 112 is a tactical opportunity to get long for 113 and 115. Okay, so I'll be watching. You'd expect this to stay heavy, but if it doesn't, it means something's on and you want to look to get long. Okay, now the commodity currencies, these are, remember, big trades for us. Preferred trades for the year, we're looking for Aussie to print new lows. Same as the yen, we're expecting these flash crashy areas from early in the year to give and us to go to new lows here. So this trade is still in play. We expect the RBA to lend a helping hand. Any kind of rally here for us has always been a sale for a move back lower. Here, it might just get traction, okay? Keep in mind, you do not want to go gung-ho chasing moves into the open. These gap downs, gap up in the opens tend to catch most people off guard, and they tend to be much harder to trade than people actually think. But this is still in play for the move lower, especially if you get the strengthening dollar. And very similar action on the Kiwi, which is being fairly technical, because you see after that breakdown, we popped back up, the 200 was tested, and now we expect it to go right back down to the 65s and lower. Now, I can't stress enough how tricky it is and how I would not be chasing any moves. I haven't put on any trades here into the open. CAD, very similar action on the CAD. We're still looking if on the weekly this can complete this final symmetrical move all the way back into the 139, 140. We'll have to see, but clearly if we get risk off and markets rolling, this should start to move very actively to the upside. Okay. Now, in terms of the equity markets and the major markets in terms of futures, clearly what you want to look at is you want to keep an eye on the VIX. Okay. So what's happening on the VIX? So here, and as a lot of people have been reporting, right? Don't forget, we're going into a week with Trump's essentially potentially thrown the trade deal out the window. We've had North Korea firing missiles again, right? So essentially what's happening to the VIX? We've got VIX holding heavy with, once again, record short positions on the VIX. So everybody, their pet hamster, the Target manager, the McDonald's manager, they're all short VIX, pocketing an 8% monthly carry cost, basically positive yield on this. And essentially we are at record short positioning. Remember what happened when we had the VIX blow up in early 2018? Remember what happened to the VIX when we had the little correction in December this year? Watch this. This has the potential to get funky this week, especially into the open. As usual, on the day, the VIX is the true mean reverting instrument, not price. VIX, volatility is mean reversing. So what I would say, if at any time on the day we spike into the 20s and we hold, something like that, then, it might be nothing to write home about. But if on any given day, right, you see this rip higher into the mid-20s, so essentially moving up here into the mid-20s, it probably means we're starting to get to up 75, 77%, right? that's where things could get really silly. If you see it on the day where it's up over 75%, so what I would say is something like, 75 to 100% up, that's when things can really get funky and really get out of whack. But all of a sudden, you really have to go back to watching the VIX very closely. Now, in terms of equities, let's just look at the SPY. It's a similar chart across the board. So you see how we're pressing here high. So we're really set up for a decent correction here as we've been rallying on the trade deal talks. Now remember, to the level to the downside, what is the first thing we would be looking for on any aggressive selling? That gap fill, right, that we've been focusing on. So we would be looking at a very, very minimum at a swift 3-4% move down, right? And that would be filling the gap on any of the indices. If you're looking at the ES, if you're looking at the NQ, if you're looking at the YM, it doesn't matter what you're looking for this week. The key level is up or down or above or below the 50 DMA, right? As long as you hold above the 50 DMA, nobody's going to have any inclination to panic. If we start to get daily closes below the 50 DMA on any of these, you'll probably start to see a little bit of panic. What's happening on the bonds? On the bonds, our base case hasn't changed. As far as we're concerned, we're building a bottom here at the 146s, and we expect them to base here and ultimately try and trade into the 150s, into the 200 DMA. So that hasn't changed. We've been bullish bonds. We've been nibbling on bonds to the long side. What's happening on crude? Crude, again, it's all a bit funky. We'll have to see how we open today. But crude, it looks like it's holding that break. And as long as we hold below the 62.50, that's been our pivotal level. Below, we are looking for the 60 to be the bull bear line for the week. And a break below, we have extremely high conviction that we're going to come back into the 55 mark. Any day close above the 62.50, you have to watch out. You have to be very wary. The market will likely want to try and take a stab at these highs again. Gold, what's happening on gold? We'll have to see how we open, but very suspicious the way it keeps on getting smacked down. But you see, as we saw last week, again, is just, the bids are coming in. They're still supporting these lows. So you have to be suspicious about that if you're bearish, right? So here our base case hasn't changed. Is a day close below this box. We expect the 1250 to come in and print extremely quickly. As long as we don't break below here, the risk is that it catches guys who've been shorting this into the hole offside, and we see 1300 print extremely quickly too here. Okay, now what does that mean for the DXY? Here everybody will be looking for very, very bullish action on the DXY, right? So the big question is, seeing how we traded last week, is this going to go completely parabolic like everybody expects, right? And you're going to see this go through the 98 as you also see that USD CNH ripping higher or not. We'll have to wait and see. I still think that if you are bullish USD dollars, the best plays, the conviction trades are getting long dollar against AUD, against NZD, and against CAD. Those remain our conviction plays to get long dollars against these. So short USD, AUD USD, short Kiwi, and long CAD, right? So long USD CAD, short Kiwi, and short Aussie. Those remain our conviction plays. In this environment, right, which remains big potential for repricing and for risk off, our conviction play hasn't changed for a while, and it remains short USD. JPY. We feel that this is the best trade on the board, the most asymmetric risk reward on the board. So that these is what we would be focusing on in terms of Forex. If you're trying to be tactical, we would be looking what happens around the 112 mark in Euro USD, because this is a pivotal level. So we would be tactically short below and long above, but we still prefer these plays rather than getting involved in Euro. Again, I can't stress enough how I would not be chasing any moves early on in the week. Early on here on Sunday. Remember that Japan and China are closed. The must-have chart on your screen is going to be the VIX going into the week. And as we've been saying, regardless of the news, we have been seeing some very funky action on equities. Breadth has been clearly deteriorating. You're getting some very, very ugly action. Google gap down, 3M gap down, Exxon, Nvidia, and they're not recovering, right? They're not recovering. So here, even it's not uncommon where the market is putting in tops for the breadth to get narrower, narrower, narrower until the bigger names, one by one, they start cracking, okay? So you always want to keep an eye on Apple, on Amazon this week, but no change here, especially on any sign of weakness on the equities. We would be aggressively looking to get short for the moves back to these gap fills. Again, we are not, I repeat, we are not aggressively selling into strength. We are aggressively selling once weakness materializes, okay? So that's pretty much where we are. Let's see where the week shapes up. I suspect I'll be doing more than one updates this week because there should be plenty to talk about, but I wanted to get this out for starters. Have an awesome one. Talk to you guys soon. Take care. Bye-bye.